It's a theme. So what can we expect as far as taxation is concerned for you and me, the salaried class, and of course for the wider community? Surabhi is standing by with the tax expectations from this interim budget. Surabhi, over to you.
Thank you very much. Well, stability, I think, is the biggest ask and the biggest expectation that we're going into this budget with. Now, the Feb budget, of course, is a vote on account wherein no major tax changes are expected. But the fact that this is a pre-election budget is raising hopes that personal income tax perhaps will see some tweaks and that the government will partially sweeten perhaps the concessional income tax regime, which was also sweetened last year because they had introduced standard deduction at par with the old tax regime. So the big hope is that the standard deduction amount perhaps will be raised from 50 lakh to, who's to say, 1 lakh rupees this year, perhaps for both the old regime and the new regime. So that's the hope, or that is the big ask. The other demands for increasing deductions under popular sections like, ATC, medical insurance, ATD, home loan interest, which is section 24, the 2 lakh rupees deduction that we get. All of those are hopes and asks, but changes are really unlikely. Now, let's talk about other major direct tax expectations. Topping that list is an extension of the concessional 15% tax rate that is offered to new manufacturing units. As of now, the lower rate will be offered only to companies that set up operations by the 31st of March 2024. Industry is hoping that this timeline will be extended at least by 1 year, if not more, to power the Atmanirbhar or the Make in India push of the government. Then I'll come to three critical, long-standing, long-awaited tax policy moves that experts are hoping that the finance minister will address in some measure. Now, the first is the much-needed simplification in the capital gains tax regime, which currently involves, of course, a plethora of rates, as we all know, and different definitions of long-term and short-term. The holding periods vary across asset classes as well. The present regime is also not uniform with respect to the indexation benefit. Remember the big headline from last year. Some investments get that indexation benefit, while others, like debt mutual funds, no longer do. CII, in fact, has proposed a simplified capital gains regime, which will define long-term very simply as 12 months for all financial market assets, whether it's equity or fixed income assets, with a uniform 10% tax rate for long-term gains and a 15% uniform short-term rate for short-term gains. Now, the second major tax policy signal that the tax circles are really awaiting is the implementation of the global minimum 15% tax as part of the international tax framework, which is known as BEPS, base erosion profit shifting. Now, why do I say this is important? And signaling is going to be critical and vital over here. Over 40 countries have already put this global tax norm in motion, and India is expected to announce rules for its implementation here as well. This global minimum tax is likely to shore up the government's tax kitty, so the government should be quite happy to do it, but it does require amendments in our tax laws, in the Indian tax laws. Now, while a rollout will probably happen after the general elections are through and done, industry is still expecting the PM to announce the intent and the directional action plan with respect to this global minimum tax and how India plans to implement it. So maybe some announcement in this budget. Let me come to the third major tax policy issue, and that is TCS and TDS. And we had so many headlines on this last year as well, right? Now, the hike in the TCS, or the tax collected at source for overseas remittances, remember that was hiked from 5% to 20% in last year's budget, and that had made lots of news. The hope is that the FM will offer a way to perhaps offset this 20% TCS that we have to pay against the TDS, which employers are anyway cutting on salary income. So that would ease a lot of the cash flow issues that the salary class is facing. Then there is a long-standing request of, reforming, rationalizing and simplifying the entire TDS regime itself by reducing the multiple rates and all the types of, payments to perhaps only 2 or 3 main categories. Because right now you have, this going into several sections, almost 30 sections of the Act, and there are multiple, rates in effect. So that would streamline the TDS payment and collection process. Finally, the industry is hoping for some tax incentives, perhaps to boost some of the key focus sectors like AI and green energy, with a specific ask of granting the green hydrogen and the green ammonia industry perhaps infrastructure status. So tax and consulting professionals will perhaps be hoping that if not immediate changes, the FM will offer some clear tax cues and clues to indicate the direction of tax policy on these big matters in Budget 2024.
Oh, that's a huge list, Surabhi. Thank you very much. Let's get the expert in. You spoke about tax professionals.